Tesla shares fell more than 6% today. The stock has recorded its worst weekly drop since March 2020. As investors worry that the company's CEO Elon Musk may dump more shares after Tesla announces its quarterly earnings on October 19th. Most Tesla investors fear that they may be walking on thin ice by keeping their shares or buying in the dip. Hey guys, welcome back to Everything Tesla Stock. It's been a rather tough week for Tesla and its investors, as the company's stock price has dropped significantly over the last few days. While this can't be fully attributed to one particular reason, it's believed that the drop is as a result of the recent updates on Tesla, such as the second AI Day, which featured different expected projects from the company, and the release of the automaker's deliveries for the third quarter of the year. Tesla stock has been dropping significantly at a rate that hasn't been recorded in a long while. Although most analysts are very optimistic that the stock will make its way back to the top of the chart, several others are quite bothered that their shares may continue to drop in value. What lies ahead for Tesla's stock and its investors? Keep watching to find out. More details in this video. Before we get into it, if you like this type of content, don't forget to like, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. While it could be profitable to buy in the dip, especially for a growth stock like Tesla, it is often difficult to determine what the market's going to look like after. Tesla stock has been in a downward trend lately, and many are still unsure of what to expect of the stock price in the coming weeks. The stock recently recorded a 30% loss so far in the year after shares went down 7.3%, driving the stock price as low as $245.98. Many have attributed this decline to the stock value with regards to Tesla's Q3 deliveries, which most people claim was below expectation. The car company reported total production of 365,000 EVs for the third quarter of the year, and total deliveries of 343,000 cars. According to estimates compiled by FactSet-owned Street Account, analysts were expecting Tesla to report deliveries of 364,660 cars by the period ending September 30th, 2022. Likewise, Tesla's second AI Day was not quite as anticipated. Although the company did provide a prototype for its humanoid robot, as it had promised, a lot of people believe that the technology was far from ready for the commercial market, and it's not exactly in a point to transform the face of AI. Also, the car company didn't give too much detail about its anticipated FSD technology, even though Musk had previously claimed that Tesla cars are gradually reaching the point where they will not require human drivers. And then again, there's the issue of Musk's acquisition of Twitter, which now seems to be turning into a reality. He also hinted in a recent tweet that he plans to transform Twitter into an app that can be used for several tasks. While this may seem to be a lucrative strategy, the big question is, how is he going to pay for it? And will this help Tesla stock to recover? Keep watching to get all the details. The Tesla price further plunged after Musk hinted that he intends to follow through with his bid to purchase Twitter. Musk plans to purchase the platform for his original offer price of $54.20 per share, spending a full $44 billion. Musk said earlier this week that he would buy Twitter at this price, but not only will this be used for funding the purchase of the social media platform, but it also includes a condition that the closing of the deal is contingent on debt financing for the transaction coming through. Musk reportedly has about $20 billion of cash as returns from selling part of his Tesla stake multiple times this year and last year as well. This means that he would need to raise an additional amount, even if the equity and debt commitments are honored. Wedbush analyst Dan Ives thinks that Musk might sell another $2 billion or $3 billion of Tesla stock to be able to cover up for this. Although Musk is the world's richest person with a net worth of $219 billion according to Forbes, a large portion of this fortune is tied to his stakes in Tesla and SpaceX, which means selling off some of these shares may be his only option. Aside from concerns about Musk selling off his Tesla shares to purchase Twitter, investors are also worried that buying Twitter may shift Musk's focus from Tesla, especially now the company requires more attention due to the ramp up in its new factories that are opening up, and the increased competition in the EV industry. Also, Musk has made repeated claims of fake accounts and incorrect reporting metrics on Twitter, and he will now also have to deal with the aftermath if he eventually assumes ownership of the company. However, while Tesla may not be performing well due to the aforementioned reasons, it is also important to take into account those factors that are likely to boost the price of the stock in the coming months. Cybertruck may also be the first amphibious electric car ever made, and Musk disclosed in a tweet late September stating that the Cybertruck's going to be waterproof enough to serve briefly as a boat, so it can cross rivers, lakes, and even the seas if it isn't too choppy. Tesla's Cybertruck was unveiled in 2019, and it is said to be awaiting production in 2023, and there's a lot of anticipation surrounding it. This isn't just because the vehicle is Tesla's first pickup truck, but it's also because of its incredible features that are out of the ordinary in most electric vehicles, and cars in general. Although, according to Tesla, the pickup truck is designed for incredible performance, acceleration, and a large storage capacity of more than 2,800 liters, ultimately, durability and passenger protection are the key points. Musk expects Cybertruck production to begin in the middle of next year, and he thinks this may be Tesla's best product ever. In addition to Cybertruck, Tesla's semi-truck is also ready to hit the market anytime soon. Musk disclosed this in a recent tweet, stating, "Excited to announce start of production of Tesla semi-truck with deliveries to Pepsi on December 1st. Not only did Musk confirm the production of the semi-truck, but deliveries for the vehicles are also set to begin in earnest. In a recent statement by Pepsi, the company stated that the trucks will also support its Frito-Lay plant in Modesto, California, and its Pepsi beverage plant in Sacramento. According to PepsiCo spokesperson Andrea Foote, the company is looking forward to its next step in its positive journey to sustainability, and will provide more details once it has taken delivery. Although neither Musk nor Pepsi said how many trucks are going to be delivered, it's still a positive sign that the semi-truck project is in top gear. Tesla first announced its semi-truck back in November 2017, and production was set to begin in 2019. But like the Cybertruck and Tesla Roadster, the project got delayed, although companies like Walmart, FedEx, City Furniture, and JB Hunt Transport Services have all at some point claimed to have made reservations on the vehicle. The demands, though, for Tesla cars have been incredible over the last few years, with the automaker topping car sales in many of its markets globally. Although Tesla has yet to increase the prices for its EVs in order to meet up with demands, more of its cars are still being rolled out quarterly. If Tesla's demand continues to increase over the years, then the car company may not have to lower prices for its cars, which is a good thing for overall demand since consumers may be waiting for a drop in price before buying a car. Likewise, the automakers recorded a huge profit margin by increasing the prices of its cars, and it will continue to rake in more profits if demand is sustained at a high level. Also, compared to Tesla or Starlink, Twitter is a less complicated business to handle, so it may not take much of Musk's time, or distract him from the needs of his other businesses. When a stock price falls, investors tend to shift to another stock they believe has better growth potential. However, investors may want to give it a second before switching from Tesla to another car company. That's because Tesla as a company is more transparent in its sales and revenue, and this is a vital factor to consider before investing in any company's stock. It's hard to find a company that is almost as open to its investors as Tesla, and also has positive growth potential. Tesla's still in its early stages as a company, so it is only expected that the stock price is going to fluctuate over time. Also, a drop in price should not come as much of a surprise to long-term investors, since stock dips are a constant part of investing. The recent events with the car company have kept Tesla shareholders on the edge. Depending on how the stock performs in the coming weeks, Tesla's investors are going to have to decide whether or not to hold onto their shares or sell them off at a low price. But what do you think? Do you think the stock is going to perform better anytime soon? Let us know down below, and if you'd like to know what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there!